Most traders don't actually lose because the analysis is wrong. They lose because they buy too high and they sell too low. Today I'll be showing you how to use premium and discount inside a trading range so that you will know where to buy and where to sell. So if this is something you would love to see, stay with me to the end. They trade the market. I trade my namesake. I am gold, not just a trader, but a trader who trades our namesake, gold on gold. In this video, I'll be breaking down premium and discount zones and show you how I use them to filter out bad trades while catching the high probability setups. So let's head over to the chart. Now, what is a trading range? Here. Now, this here, right here, is our break of structure. So this area from this high to this low is our trading range. From this high to this low is our trading range. Now, if you bring your fib, we see from the low because we are buying here from the low to the high. You see now this area, all this area from here to here. Let me change the color. From here to here, this is our premium. This is our premium area. While this is our discount area. So this is our discount area, while this is our premium area. Okay, sorry, before we proceed, for the fib setting, it should be 0. And check every other one aside from this 0, 1, and 0.5, yeah? And then change the colors, just make it one color. I just tap here, change the color, make the 3 of them one color. And then, if you want to add background, let me show you. Let me try this fib out. Let me try another fib, sorry. So let's work on this now. So 0, 1, and 0.5. If you want to add background color, you can add background color, you see. You can use the color. You can change, use any color you want for the background color. But it's disturbing. I don't like it. So I just removed the background color. If you want to add the prices, you want to add the levels, you see 0, 0.5, 1. You can do that, but I don't see the need to, so I just removed it. So these are my fib settings, yeah. Let me change it back. Don't want something that will be straining my eyes. So this I changed the color. I made it one color, the 3 of them. You get. So you can also do your trend line or you switch it off. I don't like it. So these are my fib settings. You can save it, you can screenshot it, whatever you want to do. Yeah, that's the fib setting. Okay, back to what we're talking about. So this area that is up because This is our break of structure, don't forget. This area, now price is overbought here. You don't want to start buying when the price is high. Anything above this 50%, this price is high. Yeah, we would love to wait for price to come into this 50% before we start looking for more buys. Do you get? This here is it's the price is you should be looking for sales here because now the price is in a premium area. You should be looking for sales here and then you should be looking for buy in a discount area. This the middle line is the 50%. This line here, this middle line, that's the 50%. And you only buy when price is at the discount. It's the same thing, even if we're in a downtrend. Let me show you an example of a downtrend. Alright, so if we are also in a downtrend, this is our high and this is our low. This is our high and this is our low. And here is our breakout structure. So once price has taken out this external liquidity, we are expecting it to pull back to use an internal liquidity. But should we be buying from a premium zone? No. Remember when we are buying, we took from down to up. Now we are selling. We take from up to down. The same thing though, but it's just best to do it like this. In case if you want to use the extensions, targets and all that, it's best to do it like this. So from up to down. We shouldn't be selling anything from here because this right here is our discount. We shouldn't be selling from our discount. We should be buying. And this right here is our premium. So we should be looking for our buys from here. What will we wait for? Wait for price to pull back into the discount and then we can continue with the sales. So this is just practical textbook example of what premium and discount looks like. So now let's check chart examples and how that works. Now for most people, majority of traders, they say that premium and discount don't work on gold. My dear, I'm about to show you how it works like magic on gold. So please watch till the end. Now we're on the 4 hours. You can use 1 hour, but majority of the time, let me show you. Majority of the time, 1 hours and structure can get noisy or messy. So it's best to zoom out to the 4 hours. Yeah? Like this is a 1 hour structure. This is a breakout structure here. Yeah. This is our low. And this is our high. Please don't tell me that this is your high and this is a pullback. Don't do that, please. So your trading range should be from here. From here to here now is your trading range. Your trading range is just from your swing low to your swing high. That is your trading range. And I've already done a video on market structure teaching you swing lows and swing highs. Now this here is your trading range from your swing low to your swing high. Just take your fib there. You can see that this tapped right into the 50%. So for those of you saying that 50 discount and premium does not work on gold, I don't know the gold you're trading. If it's the same gold I'm trading, then you should better go and check again. See, yeah, it takes time, yeah. But if you two are not chasing the market, why can you not be patient for a pullback into a discount zone? Don't chase every candle you see on your chart. I've said this severally. So you can see here, It tapped neatly into the 50%. So is anything, any POI below this 50% is what you should be looking for. Don't buy here. Don't buy here. Don't even buy here. Do you understand? Let's check another one. Oh, good. You got lucky. That one. This is another break of structure here. So let's put our fib from our swing low to our swing high. Can you see we still got another 50%? This is why when others were taking their buy setup here, I was not interested because this POI was not in the 50%. I was looking at the 4-hour AVG. Let me show you. I was looking at the 4-hour AVG because it's a POI that fell below the discount zone. And you now want to buy from the discount. I don't have much money to be dashing people for liquidity. Okay, so this was the high, this was our low. So you can see this 4-hour average. This is why I was interested in this 4-hour average. It fell in the discount zone, and you can see from the discount zone, it tapped it neatly. You even used the discount zone as a support and started buying. Even the blind could catch this buy. Sorry, the blind cannot see the charts. Okay, so what of this one? You might say, oh, good, you got lucky in those two. It's fine, it's all right. I'll show you a lot. Now, remember, this is our swing low. Let me draw it. This is the part here. This is it, and this is it before this pullback. Yeah. So this is our swing low. This is our swing high. That is our trading range. This swing low to this swing high is our trading range. Take your fib from the lowest candle to the highest candle. Take your fib from the lowest. You can see that this zone, that was why I told you that I was waiting for this FVG, because this FVG fell in the discount, but price did not come into our discount area, which is fine. Price must not always come into the discount, but majority of times price comes into discounts. I will show you more. Don't worry, we are here to learn. Of course, this one, even the blind can see that the price came into the discount range, so there's no need to do that. This, if you go on the 1 hour, okay, I wanted to give you guys this example because 1 hour charts can get really, really messy. Yeah? Now look at this. You will say here is a break of structure. Yeah. You will also say here is another break of structure. Yeah. This is 1 hour because now you'll be saying, okay, if you put your fib from here to this place, according to you, your break of structure. Yeah. You see, price did not pull back in. But then, now that you are in this break of structure, you did here to here. Price took you out. Now, when you are confused like this, just see, don't stress yourself. In this life, the trading is already so stressful. You don't need to stress yourself. Go to the 4 hours. You see this your break of structure. On the 4 hours, does it look like a break of structure? So simple. Zoom out when you are confused on if your trading range. When you are confused, oh, where's my trading range? What am I doing wrong? Zoom out to the 4 hours. You can see that the last block of structure here is here. So what will you do? Take your fib from this low to this high. And what happened? You can see that price neatly tapped. Oh, heaven. God, please help me on network today. So you can see that price neatly tapped into the 50%. So whenever you are confused about your structure, just zoom out here. If you're on the 30 minutes, zoom to the 1 hour. If you're on the 1 hour, zoom to the 4 hours. You get, just zoom out to get, because if you miss your structure, your trading range, you automatically miss the discount and premium entries. You can see that price neatly tapped this zone in here, and then we bought from that area. Here we didn't get the pullback into the discount. from this low to this high. We didn't get a pullback, which I told you it's normal here. But you will notice that here we got the pullback into the 50% here, which is sweet. You get when it happens here and you catch it, yourself, you will be happy with yourself. So this was a break of structure. Please don't tell me, don't come and tell me that, oh, this is also a break of structure. This is also a break of structure. Did we pull back? Did we get pulled back to these levels? No. So all these are not break up, bro. Yeah, you can trade them individually, yeah. Like you want to catch this buy. I'm sure if you go to the 1 hour, you will see the noise. But looking at it, this right here is the real break of structure. And this right here is our trading range. Please don't miss it. This is why you're always taking SL, yeah? Like I said, lower time frame trading, you can catch these setups here. But immediately you see that price has started taking out this, giving you this change of character internally. So immediately you see that price is giving you this change of character, then zoom out and check your trading range. Know that internal pullback is starting. So you have to zoom out, check your trading range and where to expect. And you can see price used the 50% neatly. Use any POI you want to pay, probably this area, and price used it to buy. See, it happened over and over and over again. And you can see on this 1 hour time frame, you can probably trade this and this, but just know that if you want to check your trading range and you are confused, oh, which range should I use? Personally, you can also trade this with your trading range. These are lower time frame structures, but know that there is a trading range here that price has not don't put back into, and you should expect that once price starts changing character, that it will pull back deeply into this range. Yeah, let me give you another one. Okay, let me use 4 hours. There's something I want to show you guys. I also fell for it here. Now, how many now have I set so far? You see this stuff that happened here. You see this stuff. This was the trading range. Price only came back. This was the trading range. Price only came back to the 50%. You see this stuff that happened here. Price only came back to the 50%. Mitigated zip breakout mitigation block here. And then started buying. Now, this is even what I want to show you, because I know a lot of us, me too, I joined. A lot of us chop SL. Thing is that when you are so fixated on the lower time frames, you just get carried away and, shit happens, bro. So we're trading this structure. I personally thought I was trading these structures, we took out this has already put back, so took out this, and then this is the low, this is the high. So because this zone has, oh Jesus Christ, this zone has already had a complete pullback, so we trade with this that has not had pullback and this, so you get 50%. And then I'm coming, just go with me, flow with me. Then this is another range from here to here. This was the high, so put our fib, our low. You see that it still pulled back to the 50%. This is to my parties that are saying gold does not do 50% discount. Okay, this is not gold, this is silver. Yeah, it's silver, it's definitely silver, it's not gold. Now this is another break of structure right here. So we take our fib, and what we will be expecting, there's nothing even here to expect, but let's say we'll still be expecting 50% here. But what the price do? Price took this low. Price took this low. Now what do? We are supposed to zoom out. Yeah. Know that this is our trading range. This high, this put this low, and this low put this high. So this is our trading range. price is pulling back externally or external. Like price wants to give a deep pullback. So what do? Take this your trading range, and then what do you expect? You expect it to come to this 50%. Like you will now understand why price took out your stop loss and what to expect. This other block had an inducement here, so price practically used it. You know, I told you that this zone has already gotten its full pullback. Another thing price would have done is come here, take out this lows and use this FVG. But price can decide to use this or this. I mean, this was an area of support, so yeah, an area of resistance. So price will definitely use this POI. So now you will now better understand why you are taking unnecessary losses in the market. It's because you don't know this trading range. I don't know discount and premium. Even if you go to the day, let's check out what the daily did. Oh, I think 24 hours, yeah. So you can see, if you zoomed out to the daily, you can see that all these are just internal structure, and this is our external structure. And you can see when the pullback started happening, he used this as an inducement or liquidity and then used this demand zone here. Yeah. So, like I always say, if you chop unnecessary stop loss, what will you do? Zoom out. Now, the logic behind this discount and premium is that nobody wants to buy something when it's overpriced. And you wouldn't want to sell something for very low. Let's say you bought gold at 1,000. Gold is now 500. You want to sell. Does it make sense to you? No. You probably want to sell now that gold is 4,000. Yeah? You want to sell now that like now, gold is overbought. Gold is above 4,000. You would want to sell at those areas. You will not want to buy when the price is less. So this is the logic behind this premium and discount. And if you're an economist, you know our equilibrium, which is 50%. 50% level is the equilibrium where the buyers and sellers, they come together to agree on a price. Buyers will buy when it's lower, sellers will sell when it's higher. Then equilibrium is when they come together and agree, okay, oh, this is favorable to buyer, this is favorable to seller. So those are the areas you want to get interested in. So in trading, we buy in discount here, and we sell in premium. Remember, when you are buying discount, of course, you don't buy blindly. If you've not watched my confirmation video, you can go and watch the video on confirmation entry. You don't buy blindly. You pick out your POI, you check for confirmation entries, and then you knock on better lot size. Lambo or village. It's not me that told you that though. Yeah, another thing, premium and discount zones must align with the trend. Please make sure that your premium and discount zone align with the trend. We cannot be buying and then you are doing premium and discount zone for a sell. That would be crazy, yeah. That would be crazy. So make sure that your premium and discount zones align with the trend. What do I mean? Now you can see that we are buying. This is our trading rate from year to year. So as you now got this sale, this pullback, you'll now be telling me that this is your premium, this is your discount, your FIB 2. You'll be using your FIB 2 to say this is your premium, this is your discount, and you want to sell. Sorry, did they lose nuts inside your head? Don't go against the trend, even with your premium and discount. Make sure that your trading range is in line with the trend, just like this one. Just make sure it's in line with the trend. You get. In a bearish market, you focus on the premium zones, and in a bullish market, you focus on the discount zone. We are bullish, we focus on this. When the trend is buying, when the trend is selling, we focus on this. The next time you're on the chart, ask yourself, am I buying from the discount or am I selling from the premium? That filter alone can completely change your trading game. Trust me. When we are buying, I focus on discount area. And when we are selling, I focus on the premium area. That way, I am not trading against the momentum. So if you loved this, of course, I know you did. You did not love it, Ken. You will not love it if I catch you. You loved it. So smash the like button, follow me, subscribe, Turn on the notification bell so that when I post, you will be the first to be notified. Let me know if you would love me to go into deeper concepts like the equilibrium, the fair value gaps, the order block, mitigation block, PDR rates in general inside the trading range to better help you align all you've learned today. Thanks for watching and I hope you got value. On that note, I'll see you in my next videos. For now,